In this video, I'll be teaching you how to trade the London session, and we'll be covering some concepts like liquidity and inefficiency. So as you can see, I've written certain things out like the trendline liquidity, ranging markets, double tops and bottom, previous days high and low, session highs and low, weekly highs and low. But fortunately, we'll not be using everything here. We'll be using trendline liquidity, the ranging markets, a little bit of the double tops and bottom, and session high and low. And we might cover previous day high and low as well. Now, as for the inefficiency, we'll be covering order block, breaker block, origin block, and fair value gap because they are very, very important. Now, I want you to know that everything here that I wrote here are concepts. And I know you know a lot of concepts as a trader, but you don't make money from knowing concepts. Your job as a trader is to turn your concept into a strategy. It's like, now let me repeat that. Your job as a trader is to turn your concept into a strategy. And after doing that, you will take that strategy multiple times to build what I call trust. Because if you don't trust your strategy, you will see a setup forming and you'll be looking at it, it will just play out. You'll be like, I knew Euro GP was going to buy, I knew gold was going to buy, I knew GBP was then, but why didn't you buy? If you know this pair was going to buy or it was going to sell, why didn't you sell? It is not okay to analyze. You understand? Your job as a trader is not just to analyze, but to react. And now, how do you react? You react by building trust. So, I know you know a lot of concepts, but you haven't learned how to turn those concepts into a strategy. And that is what I'm about to do right now, to turn all these concepts into a strategy. So, having said all this, the first thing you should do whenever you come to the chart by 5 a.m., like I say, is to mark out your entire Asian range. Now, let's get the fact. You want to become a day trader. You're not a swing trader. You're not a scalper. And your job as a day trader is to come to the market every day, make money, and leave the market. You are not there to how will I put it? To hold trades for a week. No. You're there to analyze the market for that particular day, make money. And so with this, you are not looking for a multiple setup. All you need is just one or two setup every day, and you are good to go. When you come to the chart, 5 a.m., first of all, you mark out. Why I always use the word marking is because each day comes with different opportunities in the market. Each day comes with new opportunities. Yesterday's results does not affect today's decision. If you take a loss yesterday, it does not mean that you might take a loss today. So you must treat each day as a plain new book. If you come to the chart by 5 a.m., by then we must have gotten the Asia high and the low. If you come to the chart by 5 a.m., you must have gotten the Asia high and the low. So we'll be looking at trendline liquidity at first. Now let's assume that this boss here is our Asian range. Let's assume this is our Asian range now. It started from 12 a.m. to 6 a.m. So if this is our Asian range here, automatically here becomes the Asia high and here becomes the Asia low. So let me bring this to the middle so you can see properly. here becomes the Asia high, and here becomes the Asia low. Now, if you come to the chart, I'll take this off. If you mark out your range, you have to look if the high or the low is resting on any valid POI. POI are inefficiency. Other block is a POI, breaker block is a POI, origin block is a POI, and fair value gap is a POI. So this place here, this zone here, is this is not what's it called? This is not another block. This is an origin block. Why? Because why did I call it an origin block? The swing started from here and ended here. The swing started from this place. This was the origin of the swing. So if the swing started from here and ended here, that means this place is an origin block, and is a very, very important block in the forex market. So if price close below the origin block, that means it is a shift of structure. But if price did not close below the origin block, it means this entire bullish market you're seeing here is still valid. So now I will have to bring this marker back to this place. So like I said, this is the Asia range. This example I'm showing you right now, the Asian low is resting on an origin block here. And if you look within the range, if you look within this range, you discover that there is a trend line here. So this trend line here is a trend line liquidity. There are some nights, there are some Asia sessions you won't see the trend line liquidity. All you just need to watch out is if the high and low is resting on any valid POI. So this trend line liquidity is an additional confluence to the strategy. If you see something like this, all you need to be thinking, or all you need to be looking for, is a what's it called? A shift of structure, an internal shift of structure, a little pullback, and a continuation. Once price break the trend line, it is an indication that you'll be grabbing the Asia high. So what you'll be doing is you will buy here at this place. Your stop loss will be below the Asia low, and your first take profits will be at the Asia high. This is a beautiful trade, as you can see right here. And for a bonus tip, whenever the price takes the Asia high, you will likely see 2 or 3 candles moving in the same direction. So let's assume this is the high here. If price takes the high, you will be seeing a movement at least towards this region here. So this is a 1:2 trade. Beautiful setup, beautiful cash. If all you need to do is just to watch, mark out the Asian range that starts from 12 a.m. to 7 a.m. 12 a.m. to 7 a.m. and watch if the high or the low is sitting on either an order block, a breaker block, origin block, or a fair value gap. Whenever a session high or low is resting on any of these POI, that particular POI has a strong, that POI, it tends to hold. So you should be taking a position to target the other side of the range. That is just how to trade the single liquidation. So what I'm talking about is the single liquidation. Every London session, there are 2 things that are bound to happen. We either have a single liquidation, which is London session we take either the Asia high or the low. If that doesn't happen, then we have a double liquidation, which means it will take the low and take the high, or take the high first before taking the low. So the day we are going to experience single liquidation is a day where the high or low is resting on any POI. But if the high or low is not resting on any valid POI, we might experience double liquidation. I don't know if you understand what I'm saying. If the Asia high, which is here, or the Asia low is not resting on any valid POI, we will have double liquidation. But if the high or low is resting on any valid POI, we will have single liquidation, like what we are seeing here. This example is an example of a single liquidation, and the reason is because the Asia low is resting on an origin block, which is a valid POI. So this is for an origin block. Now let's see the same example on a breaker block. We are still using the trend line liquidity as the liquidity within the range. So this other example here, this other example is an example of a breaker block. So what makes a trend valid? Minimum of 3 touches moving in the same direction. 1, 2, 3. So 1, 2, 3. Since we say 1, 2, 3 touch, it means we are in an established bullish trend. So all you should be looking for during the Asia session is where price will react to. So for the breaker block, now let me take this range here and put it here. So now let's assume this entire box here is our Asia range, which started from 12 a.m. to 7 a.m. What you should be looking for is weak pullback. I use the word weak pullback. The candles must be short. Short candles means the volume is low. So all you'll be looking for is weak pullback towards a valid POI. This place here is a breaker block. If price reacts to this place, then you'll be looking for an internal shift of structure. It can happen within the Asia session. It can happen within the London session. So, but if price hits this place, sometimes I move to the 1 minute time frame. I look at this setup most times on the 5 minutes or the 15. I don't go above 15-minute time frame. Now, if price hits any of these POI, most of the time I will go to the 1 minute time frame to look for internal shift of structure. Once I see that is additional confluence or additional, how will I put it? I think confluence is the right word. Additional confluence that my bias is my bias is right, or I'm doing the right thing. So if price hits the breaker block at the close of Asia session during the London session, you should be looking for an internal shift of structure, a little pullback. You take your buy, just like what I did here. Your stop loss will be at the Asia low, then your first take profit will be the Asia high here. Like I said, you can target above the Asia high. So this is that for what's it called, origin block and the breaker block. Then as for fair value gap, it's same thing. Now this is the origin block here. In this swing, this is the origin block, but price did not react to this place. Let me take this. There are most times that let me bring back. There are most times that you will see, what's it called, a fair value gap here close to the origin block, a fair value gap close to the origin block. Now what makes a POI valid? Like I will always say, what makes a POI valid? It is presence of liquidity that makes a POI valid. Let me show you something. So this low here is like a liquidity grab inside the POI, shift of structure, continuation. Same thing with here. Now, what made this POI valid here? Presence of liquidity here. Price grabbed liquidity, POI, shift of structure, continuation. It is as simple as that. Now, this example I'm giving you, don't forget, it is for the single liquidation where price takes just either the Asia high or the Asia low. And I'm giving you example for bullish market. I haven't given you example for bearish market. Anyway, it's the same. For bearish market, just flip it upside down. It is the same. Just flip it upside down. Now, I will give you examples for double liquidation where price will take the high and the low, and how to know and what to watch out for and how to enter as well. Before I talk about the double liquidation, now let's go to the chart so I can show you real-time examples of the single liquidation and how it plays out during the London session. I've seen a perfect example that explains the single liquidation. Now, if you take a good look at this price action here, you discover that, okay, let's start from here. Discover that this is an established bullish market. Why? Because it had a lower, higher low, higher high, higher low, higher high, higher low, just like that. Higher high, higher low. Then price price broke structure here to the upside. This place automatically becomes a breaker block. Now, back in the days, it is called break and retest, but ICT concept, ICT called it a breaker block. Now, this place is a POI. This particular place, why is it a POI? A previous high, price took it. If price breaks a previous high, there is every tendency, no matter how high it goes, there's every tendency of price pulling back to retest that place. And if price retests there at certain time during the day, it shows, and you see certain things or certain other confluence, you can actually frame your decision with just that price action. So this box is our entire Asian range here. If you look carefully, you discover that the Asia low was resting on this POI here, which happens to be our breaker block. And if you look within the box, you discover that there's a trend line building within. That is the trend line here. Now, you must not see a trend line within the box to take this setup. This is just an additional confluence. Sometimes you just see only ranges. But if the low is resting on any valid POI, which is either the breaker block, an order block, or a fair value gap, and you see an internal shift of structure, something like this. Let me zoom in a little bit so you can see. If you see something like this here, price breaking the, the trend line liquidity, is a good place to buy. You put your stop loss either the low here or to play safe, just put your stop loss at the Asia low. Your first take profit will be the Asia high. If price rate the Asia high, like I said earlier, you will see about 2, 3, 4 candles moving in same direction. So this is a beautiful day trading setup. If you pick a setup like this during the London session, you are done for the day. And as a day trader, what you're looking for is just minimum 100 to 200 pips. You are not looking for much in the market. But there are days where you can get 300, 400. As a matter of fact, I made over 1,000 pips today from a day trading setup. So I never knew I was going to make such money. I was just following the trend and following what the market was doing. back to this. Your entry will be at this place. Your stop loss, because I see a lot of traders having issues with entry, how to enter. If you mark out the entire range and you figured out if the high or low is resting on any POI, if the low is resting on a POI, just like what you're seeing here, your entry will be here, your stop loss will be below the low, and first target will be at the Asia high. Then you can hold a little bit after price takes the high, hold a little bit for some extra cash before closing. So this is a real-time example. Now let me show you another example here. Don't forget that this white line here is the previous, is the breaker block that we're working with. Now this entire box here, again, as you can see, is our Asian range, still resting on the breaker block. That is why you're seeing this white line here. Let me check if we have a trend line liquidity. Okay, yes, a valid trend line must have minimum of 3 touch. Now we have our first touch here. We have our first touch here, the second one, third, fourth touch. So this is an established, or this is a valid trend line. So what you'll be looking for is a break of the trend line. Now this trend line is happened during the Asia session. Sometimes you might see this trend line above the Asia session. If you see a trend line liquidity above that session, just know that that particular place, there is money resting there. And what you should be doing is, if you are seeing this trend line above here, you take a buy, because price will definitely raid all the liquidity that is resting here, 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 and here, which you can see happening here. So this was a shift of structure here, an internal shift of structure within the range. I don't like taking positions during the Asia session. I want to wait for the London session. Why? Because there are times where you take a buy here, and towards the London session, price will just go down, rate the Asia low. So I sometimes want to wait to see how the London Open is going to react, because sometimes we see heavy volume coming into the market during the London opening. So London opened here. Upon seeing all this information here, what I needed to do was just to buy and put my stop loss at the what's it called, the Asia low, and I made over 200 pips. It is pretty simple. Here will be your TP1. As you can see, okay, price hits the TP1 here, pulled back, but it didn't close below here. If price closed below this place, now let me mark here out so you can see what I'm talking about. I will want you to watch this video over and over. You will not get this in a day. I repeat, you will not understand this strategy in a day. So it is imperative that you watch it over and over. There's a POI here. Ask me and I will explain. Beautiful. So why is this a POI? If you watch carefully here, you see that there's a fair value gap here. So price was testing it. If price closed below this fair value gap, I would have sold, put my stop loss here, my first take profit will be here, while I will hold, just like what I did today. If price was to close below this POI, I would have sold, like I said, but because price did not close below this POI, we kept on having multiple rejection here, I bought. So let's talk about the double liquidation. This is a process where the market will raid the Asia high and low. Here is how to trade the double liquidation. After giving you the examples here, I'll be opening the chart to show you real-time examples of this particular strategy. Now, like I will always say, the first thing you need to do is to mark out your entire Asian range, they start from 12 a.m. to 6 or 7 a.m. Please use 7 a.m. Use 7 a.m. because at the moment 7 a.m. works better for this strategy. After marking out this range, you have to look if the session high or low is resting on any valid POI. So if you take a look at this box here, this entire range, you discover that the Asia high or the Asia low was not resting on any valid POI, and there was a POI above the Asia high, as you can see here. So now your job is just to wait. If you see any POI above, okay, this example is for the sell. I'll be giving you the buy example very soon as well. If you see any POI above your Asia high, then all you need to do is just to wait during the London session for price to tap in there. Once price tap in there, allow price to pull back to the range. Some people will want to sell from here, but I don't advise selling from here. That selling from here is like catching a falling knife. You understand? You might get injured. So allow price to pull back to the range. If price pull back to the range, wait for a little pullback. If the pullback does not go higher than the Asia high and it starts selling again, you can sell. Put your stop loss. Your stop loss should just be few pips above the Asia high, because if price close, if the pullback goes above the Asia high, that means it is a buy continuation. But if the pullback does not go above the Asia high and you start seeing price falling, you can sell. If price close below the pullback, is an extra confirmation that the sell volume is high. Your first take profit will be the Asia low. Then you can target any inefficiency, which might be a breakout block, a fair value gap, origin, or any inefficiency resting below what's it called, the Asia low. So the liquidity we are using here is the ranging market. As you can see, this box here, this is a ranging market. So there are days where during the Asia session, there are days where during the Asia session the market will range, and whenever I see a ranging market, I'm always happy. Why? Because after every range, there is likely to be a breakout. So there is liquidity resting above this range and below the range. If you see any valid POI close to the high, then price will likely tap in that place and sell. Now let me give you an example for buys. So now take a look at this range here. Let's assume this is our Asia session here. Asia session range, there was no the high or low was not resting on any valid POI. London session opened, price rally round, grabbed all the liquidity resting below the Asia low and pull into this breakout block here. If you want to buy, I think this is what I did today on GBJPY. If you want to buy, you must allow price to pull back to the range. Wait for a pullback, a little pullback. The pullback must not close below the Asia low. If the pullback close below the Asia low, it is a sell continuation. But if the pullback does not close below the Asia low, then you take a buy. Your stop loss will be here, which is the Asia low. Don't put your stop loss at this swing low here. It is too expensive. Why are you putting your stop loss here? Why? Because you know that once price gets to this zone, once price close below here, then this entire setup is invalid. So you buy here, your first take profit will be here. If price grab the high, like I always say, you will see extra 4 candles moving in same direction. If you trade this particular strategy for 2-3 months, I can guarantee you that you will make a lot of money. And this is what a lot of mentors are using to get their signals. This is what a lot of mentors are using to trade. This is what hedge funds, I know a lot of big institutional traders that are using just this strategy that I'm telling you. The first one is the single liquidation, which happens when the high or low is resting on the POI. And this is the second one that happens when the high or low is not resting on any valid POI. So as a day trader, all you need to do is to come to the market and look for a setup. ICT concepts will not give you money. Write this word down. What will give you money is turning ICT concepts into a strategy. And that is what I've just done here. Everything I'm saying here are ICT concepts. I've managed to turn this into a strategy, into a setup, which is the London session strategy. So if you are coming to the market, stop looking for jargons. Don't look for jargons, please. What you should be looking is, what is price doing? If you don't mark out your entire Asian range, believe me, you are trading blindly. I can tell you this from years of experience. The days I refused to mark out this range, I took losses, and when I marked out the range, I discovered why I took those losses. So please, you should don't neglect whatever I'm saying. You will not grasp this concept once. You will have to watch this video over and over and go to the chart. This is how you do it. If this is your Asia range, let's assume the day started from here. You should always know where each day starts from. Starts from 12 a.m. Let's assume this is the beginning of a new day. 12 a.m. Everything here was yesterday's activity. Your business here is over, though sometimes you have to look here for other confluence, but your main focus is what is happening here, which is the Asian range. And you are to see if the price, if the high or low is resting on any valid POI. And I've explained to you what a valid POI is. Either another block, a breaker block, a fair value gap, or an origin block. And in this case here, this was a breaker block. After marking out the range, if you see any of these things I've explained to you, you can send me a screenshot before taking the position. But you have to be fast. You understand? You have to be fast. Now let's go to the chart so I can show you real-time examples. Now I've covered what's it called, ranging market, which is also a liquidity, and session high and low, which is also a liquidity. Why? Because this is the Asia high and Asia low. Liquidity is resting in the highs and low of every session. So this is an example of the double liquidation. Now let me zoom in so you can see properly. First of all, this is my entire Asian range, and as you can see here, this is a ranging market. High, low, high, low, high, low. So this is a ranging market. Now, during the London session, price took out the Asia low here. This white line you are seeing here is a POI. I think this should be a breaker block. Price, and I didn't even see this before, before doing that example. Price pulled back straight to this breaker block here, tested the breaker block, pulled. Unfortunately, I bought here. I was supposed to buy, this was supposed to be my entry here, and I will explain why this is supposed to be my entry, and I will explain why I bought here. So price pulled back to this place. If you want to trade this setup I'm actually teaching you, please do not buy here, because it might be a sell continuation. To play safe, you have to wait for price to pull back into this range here, which you can see here. Price pulled back into the range, and wait for a pullback. I will always use the word wait. Patience will play. In fact, patience will pay you in trading. If you don't see it, it is not your trading day. Price pulled within the range. We had a little pullback. This is supposed to be my entry. Now you enter here. Your stop loss ideally will just be here, few pips below the Asia low. Then you can target the Asia high as your first take profit. This is a 1:3 trade, very beautiful, almost 1:4. The pips, 200 pips, very beautiful. Price ranged during the Asia session. Now let me give you a recap. Price ranged during the Asia session. During the London, it raided and took the Asia low into a POI here. Yes, this was the POI I was working with. Price raided the low into a POI, pulled back into the range. If you see a pull, once price pull back to the range, you should be waiting for a little pullback, which is your entry. If the pullback does not go below the range, you can buy, target the Asia high, or hold a little bit. Now this is for buy. Let me show you a sell setup. Yeah, there was a sell setup I took with same strategy. Let me look for that. Okay. If you take a good look at this range here, this was my Asian range here. This is the Asia low and this is the Asia high. As you can see, the Asia low is not sitting on a POI. This place, the Asia low was not resting here. It actually took this place, so this place is not a valid POI. Now, the Asia high as well is not resting on a POI. And if you look carefully, there is a POI above the Asia high. See, so your job as a day trader during the London session, I think I've showed you this particular setup before. Your job is just to come to the chart, wait for price to tap in this place. Once price tap into this POI, and you do this when you discover that the session, in fact, when a session high or low is not resting on the POI, look carefully. Look carefully. You will discover that there is a POI either below that session low or a little bit above the session high. Now, I will say this again. Whenever a session high, an Asia session high, or any session, whenever an Asia session high or low is not sitting on any valid POI, look carefully. There is a POI resting slightly above or slightly below. And that day you will experience double liquidation. During the London session, price will rally into one of those POI, tap there, like what you're seeing here, pull back into the range. If you see a slight pullback, if the pullback does not go above the range, then you can sell. You target the other part of the range as your first take profit, and you can hold a little bit longer. Now, I actually took this setup. I posted it. I think it's around 400 pips. I told my community that we're going to see a 400 pips minimum drop on gold. And everybody thought gold was going to buy. Especially when it was pulling back here. But I knew that we'll be having double liquidation because this POI was just too sharp, sitting above the Asia high, knowing fully well that the Asia high or low is not resting on any valid POI. And if the Asia high or low is not resting on any valid POI, it means there is liquidity resting on the high and there is liquidity resting on the low. So if price taps the high, there is high tendency of price going to rate the low. Why? Because the low is not sitting on any valid POI. The low is exposed. I'm giving you day trading secrets, day trading strategy. This is what you should be looking for whenever you come to the chart. See, it might be a little bit slow. This is not a rocket science. This is not magic that's just boom. No, it's a process. is a story. You have to follow the story. If you miss it, you get burned. You can be right about the direction and make a wrong decision. You can be right about the direction but make a wrong decision. You close in loss, but that setup will end up becoming a profitable setup. So you have to be patient. You have to understand risk. Know how much you're risking on the trade. Know where to put your stop loss. If you want to take what's it called, a sell, your stop loss should be at least few pips above the Asia high. If you want to take a buy, your stop loss should be at least few pips below the Asia low. Like I said, you will have to watch this video over and over. Make sure you understand single liquidation. It happens when a session high or low is resting on a valid POI. And make sure you understand double liquidation. It happens when a session high or low is not resting on any valid POI. And whenever a session high or low is not resting on any valid POI, look carefully. You will see a valid POI resting either above or below that session high or low. Let me go through this again and see if we have any other thing to cover. If there's nothing to cover, I think this will bring us to the end of this strategy.